Hey everybody, Lawrence from Financial. Ooh, let me adjust this camera. There we go. Lawrence from Financial Thing, back again with the Tuesday evening live stream. Hope you're doing well. 2 minutes late today. Apologies about that, but these things happen sometime. What are we talking about today? We have a kind of a lot to go through. I got an email this week from somebody that reads the Financial Thing website, and they were talking about buying and holding strategy on things like stocks and funds. And this person asked me, Lawrence, do you think that the buy and hold strategy is really the best one? Isn't it best to trade in and out of the markets? And I thought it'd be really fun to go back into an old trading account that I had, specifically iWeb Halifax, where I used to buy all my funds and shares through, and to look way back to, I think, 2014 when I first started buying Vanguard funds and different stocks when I thought I knew something about investing, which I didn't really back then. So I thought it'd be good to go back into the history and kind of look at some of those transactions and some of the buy prices, and then see where those prices are today. I mean, we're talking about 8 years. That's a pretty long history. So we're going to do that. We're going to take a look, of course, at the Trading 212 account. We're going to talk about some cryptocurrency news. I've been thinking a lot about the situation in Russia and how Bitcoin may end up being a big part of not only Russia and how they use transactions for trade, but also other countries in the future are going to look at that Russian situation and think twice about how they hold international reserves. So we're going to talk about that and a lot of other things, a lot of interesting news this week. Let me turn this off. No need for that to be up here. No need for that to be up here. No need for that to be up here. Okay. Well, let's go ahead and say hi to everybody who is in the stream today. I hope you're having a wonderful weekend. Happy Easter, by the way. I hope you got one of those big chocolate Cadbury's Easter eggs. You know, the big, huge jumbo ones. That was the one thing I used to love about being in England for Easter, was you go into the supermarket and you see those big, huge chocolate eggs, right? Which are basically responsible for every single filling that I have in my teeth right now. But I used to love those eggs, you know. So let me know if you got a big chocolate egg for Easter, if you're in the UK, and which one you got. Please hit the thumbs up. Let me get rid of this guy. Goodbye to you. Let me get a thumbs up from you if you can. Don't forget to subscribe. We'll be back on Thursday for the peer-to-peer lending stream. Invest22 is here from London. Paul New in Stockport. Peter is here in Leatherhead. Alan Duffy, hi from a very warm, did you really say warm, Scotland? Do those two words go together? John Morgan is here from Swindon. Shame the weather has turned. Maybe you should be in Scotland with Alan. Paul Bagworth is here from a sunny Padstow. No idea what that is. Colin from the Peak District, of course, the beautiful green pastures of the United Kingdom. Mike Powell is in a wettish Southampton. Aki Chap in Accrington. Dave Dawson from Staffordshire. Robert Pates in beautiful Crete. I'm a little jealous, Robert, I'm not going to lie. Even though I am in a warm and sunny Orlando, I do dream of Greece sometimes. Stephen Hale in Hottingham. See what I did there? Nottingham. And Brian, of course, Mr. 711 Honved. I have no idea what that means, but I think you are coming from Woburn. Mike said I got an iWeb account that's older than mine, but my buy and holds are more buy and lose. Did you mean loose or lose? Padstow and Cornwall. Well, welcome. Thank you. Glad you're here. Glad everybody is here. I love doing these streams every week for you. I hope you get a lot out of it. If you're watching in the future, hi. Okay. let's get right into it. Let me oh, look at that. Let's start with the trading 212 account. We were up over 19,000 pounds at some point yesterday, but of course if you follow the markets at all, you've seen the oil has taken a bit of a kick in the old arsehole today, so things were a little bit on the downswing, but still holding. Oh look, we just went over 18,500. Everything is still relatively performing well. Interestingly here, Occidental Petroleum, which Mr. Warren Buffett is a big fan of, is now peaking at over 116% of where we bought in at and ended up selling out. Now here's another example of how trading can really be a difficult thing, because if we go look at the transaction history on Occidental, right now the price is $61 US. We started here on this stock at $29.37, which is about 21 pounds. If we go back and look at the history of the trading on this stock, when we sold here the 4th of April, which is only 15 days ago. Let's look at that transaction. The price at the fill price was $57.76. So right now it's at 60, so $3 over. Not the end of the world. I mean, we've sold at different points with this Occidental, but it's done really well. Gold continued to stay pretty stable at the moment. I think it should be down a little bit today. Yeah, 2%. Gold follows oil. They tend to trade very, very closely. And what I did today also was I made a trade. Peabody Energy, BTU, which is down 3%. I actually ended up deploying more funds into Peabody today. You can see the trade here at for 816 pounds for $30.67. So yeah, I thought it was a good buying point. I've been looking for a point to kind of dump the rest of this money that was in this account into here. So yeah, we're up a little bit, about 50 cents on that transaction. So just really continuing to stay the course for as long as we can with these energy stocks, and desperately trying to get this account value up to 20,000. What I've been thinking about doing on this trading 212 account, and this would probably make my stomach turn a little bit, but is to maybe consolidate some of these positions. Possibly the smaller positions like Occidental, Flex, maybe even Diamondback, just selling those off and then splitting it up into these higher price or these higher allocation positions, just to become less diversified, probably taking on more risk. But again, the idea of this portfolio is to really jump on this oil run at the moment, try to squeeze as much as we can out of it before that market sector decides to go the other way, which is inevitable at some point. I mean, this oil run cannot continue going on forever. So possibly, yeah, maybe making this a 5 or a 6 share portfolio, increasing the risk, but then obviously increasing the possibility for returns. Do have to think a little bit about the tax obligation of selling things in profit, which, you know, whatever, taxes are what they are. But and what I'm thinking is taking these smaller balances, putting them into probably Peabody, Laredo, International Seaways, and Synovus. That would be my guess. Just consolidating down, taking more risks, trying to get this account value over 20,000, and rinse and repeat. And eventually, I think what is going to happen is we'll probably end up rotating out of this sector and looking for another place to go. And that might be cash for a while, depending on what happens in the market. If you've been following tech at all, tech's not bad today, but the tech market has absolutely been getting hammered today. Wow, look at, I mean, Tesla's up today, 1,024. If you've been watching the channel for a while, You remember when we actually owned Tesla inside this portfolio. So maybe we'll be making some changes there. Okay, let's take a look at this iWeb account. Let me just log in to this. Hang on. I do not like the way that they log you out so quickly. I mean, you literally get about 5 minutes and then you are out of there, which is silly. I mean, I need to be in there for a little bit longer than 5 minutes, iWeb. Let's see what we got here now. This is an account that I have not used for a really long time. I'll show you my account balance. It's pretty huge. I have one shell share in here, which is worth 22 pounds. Woohoo! And but what I want to show you is the dealing history going back to 2004. We're going to just look at a couple of those trades and see whether actually buying and holding was a smart thing to do. And I think I know what the answer is going to be. I haven't actually looked at this yet. But I think on the stocks it might not have been because of the stocks that I own. But on the funds, let's go ahead and just do what we bought. Oh, do we not buy anything? That's not right. Hang on. Good old, there we go. Good old iWeb. Okay, so if we look at the very first trade, I hope you can see this. Okay. Well, look at the very first trade down here. It was on the 18th of December, 2014. This is VVUSEI for 17,950 pounds. This was Vanguard. You can see here. Vanguard US Equity Fund. So, and that's the tracker that I, of course, always recommend people. You can see all my buy orders continuing through to June 2017, and then transferring out completely out of this in 19th of March 2019. That was when everything was moved over to I think Vanguard at that point. But let's take a look at the price. So let me open up another screen here. If it'll let me just, let's look at the price. Zoom out just a touch so it fits on the screen. So we looked at that price today. We purchased at 26,672p. So that is about 266 pounds. I'm going to go ahead and just copy this ticker in here. And we're going to see what we're trading at right now. So right here you can see, hopefully, 748 pounds and 6p. So that's a huge jump. We went essentially tripled, 266 pounds and 72p, all the way up to 748 pounds. That's 8 years. So I mean, this is a pretty good historical look back at how the Vanguard tracker's done over the years, and you know how it's just so much less risky than trying to pick out these individual stocks. We put that into a percentage calculator just to see what kind of returns we've gotten. We would have had if we did just continue to buy and hold. Got this nifty little calculator that will show us the percentage increase. Let's do that. Zoom in so you can see it. That's 180%. So pretty happy with that. What else did we buy back then? This is one that a lot of people in the UK love to buy. No, not that one. Let me go try again. This one. The Fundsmith Equity Fund. I didn't know any better at the time. I was just buying it to really track and see how it was going to perform against Vanguard in case I was making a mistake. But you can see the price here was 196.16. So let's go ahead and put that into the calculator here. Oh, by the way, what I think is funny about this fund, look at the ticker symbol. FUQUIT. If you read that out aloud, it may not be the nicest word. Fuquit. So that made me laugh anyways. Let's go ahead and put that in here and see what that's trading at right now. Fundsmith has generally done pretty well for a managed fund. Let's see if it's beaten our Vanguard fund. 5.94. So again, this is a managed fund that has a higher fees than our Vanguard fund. And let's do that. So this is, if this is correct, if I gotten this pricing correct, I don't think I did that right. 196.16. 196.16, and then that has gone up to 5. Make sure I do this right. I don't know why I'm having trouble with this. So that would be 594.53. So 203%. So this is one of those rare funds that has actually outperformed the Vanguard Tracker Fund by 20% over 8 years. But the reason why I wouldn't want to choose this type of fund is because if I get my pick wrong, which most funds are not going to perform as good as the index, then this could have easily have gone down in a different way or negatively. So that one has done well. And let's look at some of the stocks that I owned back in the day when I didn't know any better. 187G. Not sure what this is. Let's have a look. Shell. Okay. So we first started buying Shell at 1914. And we actually sold Shell 4 years later. Look at this. 4 years later. So we put in at 1914. Sold out 4 years later, 1909. So 4 years actually made a loss. Then we saw this big bump. Gosh. Actually, sorry. Let me rephrase that. The cost per share was 1909, and we ended up selling out at a profit for that one. And then ended up buying, I don't know why I did this, but so 2463. So from 1914 to 2463 in 4 years. So if I'd have held that, and I believe the price of that right now is less money. Let's see how much it is trading at today. So 2228. So it's actually gone down from March 2019, 2463 down to 2228. So that's just a case of where buying and holding throughout those years. It's not bad from 2015, but if you bought one I did in 2019, I only bought one. So I think that was all, I just had a little bit of cash left in the account. But that really has not performed all that well. Even if we take that 1914, let's look in the percentage calculator. Let's go from 1914 to 2228. At the percent increase, 16%. So you're going to 16% from holding 2015 to today. So that's 7 years. And now you would have gotten dividends. I know there'll be some dividends paid into that. But if you take just the pure accumulation point of only 16%, it doesn't really, that just goes and shows you how difficult picking stocks is and how timing it wrong, just not going to get great returns. So your Vanguard fund gave you 180%. Your Fundsmith fund, if you decide to go that way, gave you 200+%. and Shell has given you, merely 16% plus dividends. So let's see what else. Let's see if there's any other interesting trades that we made back then. Stock-wise, I know there was some other ones. Let me look and see what else we had. Stock-wise, come on. We had Lloyd shares. You can see here. Those. See what this 4377 is too. Oh, British Gas, BG Group. So we had British Gas, classic old British portfolio, right? British Gas, Lloyd's here. Look at that executed price, 80.16p. So I paid 72p, 72.99, so 73p. And if we look at the trading price today, we're at 45p. So that's a 50% loss holding that stock for 7 years. And let's take a look at the British Gas just for my own shits and giggles, as they say. I had quite a decent size, 849p. Let's see how much British Gas is trading for. Where are you? Does it still exist? I don't know. I haven't even looked. Maybe British Gas doesn't exist anymore. Maybe I'm so far behind the times on that. What is it now? Anybody know? British Gas, maybe it's gone. Maybe it's called something else. Yeah, I guess there is no British Gas anymore. So imagine that. Oh, keep me logged in. And no, I don't think there is any BG. No, so who knows what the price of that would have been today. Let's see if there's anything else of interest. What is this 017? Oh, we got BT. Go, we had British Telecom. Is that even there we go. Trading at 11267. 11267. So that one did pretty good. 386. Let's see how much the percentage of that is. 311. What is the price right now? 11267. So I don't know if this is like for like. Who knows, right? That could have been. I mean, that's a crazy amount, 2,818%. So if that is the true price and that's like for like, then that buy and hold would have been a home run. So interesting to see the different results from a buy and hold strategy. I go back to saying that, oh, look at this one. This is the Woodford fund that went bankrupt. See here, I had a decent amount of those shares, 4,220. Happened to sell it the right time on that, but yeah, $5,000's worth. So that would have been a disaster. Hence the reason why I always say just stick with the index strategy. You don't have to worry about all of this nonsense of trying to pick out what's going to do right, what's going to go bankrupt, what's going to go down stock-wise. Don't do what I do in that trading 212 account, because I think it's very risky. Yeah, so it's interesting going and looking back at the historical trades that were made such a long time ago. I think in general, buying and holding is definitely the right strategy, because most people are going to buy and sell at the wrong times. Tend to sell when the market's falling, buy when the market's rising, completely backwards. The time you make money in the stock market is you buy when everything is in the red. When everybody's selling, you buy. Yeah, that's a good rule of thumb. See what we got today. So we've, the commodity prices, it's the reason why oil has been getting a bit of a tough time today. See crude down 5.13%, Brent crude about the same, and then natural gas really took a hit today, but 8.86% in the red, still trading over $7. So really not that much of a big deal. The market, I think, has reacted pretty negatively to it. That's okay though. Let's talk a little bit about cryptocurrencies. Oh, and by the way, the strategy too for this portfolio is just certainly not going to change until there is some indication. For instance, maybe if the Ukraine situation were to get sorted out and they were to call for peace tomorrow, this oil strategy might completely go out of the window. I don't think so, because I think earnings reports for these oil companies are going to be really, really good for the next quarter, maybe 2 quarters. So I don't really see any need to change the strategy. And even if the conflict were to resolve itself in the next few days or a week or a few months, I think it would take a while for this to really run through the prices of these stocks anyways. And if they did drop down, it would likely be just a short-term reaction. And who knows, they may go completely higher because of the positivity of the conflict ending. But I don't see really any change of strategy, at least in the short term. But again, don't follow what I do. Do your own research. Yeah. This is a really interesting thing that I found about, and hopefully you can read it. It's a little bit blurry, but basically this shows you on the left side the negative sentiment that certain companies had towards Bitcoin. And on the right side, it shows you how they kind of 180'd, turned around their thoughts and feelings about cryptocurrency. You can see here, UBS Wealth warns clients crypto prices can actually go to zero. That was in January of 2021. And then only a few months later in May, they said UBS explores offering crypto investments to rich clients. BlackRock CEO Larry Fink calls Bitcoin an index of money laundering. On the right side, BlackRock fund bought Bitcoin futures in January. Bitcoin's real value could be zero, says Morgan Stanley. And then they say Morgan Stanley becomes the first U.S. bank that is big to offer its wealthy clients access to Bitcoin funds. And then the list just goes on and on. You got Goldman Sachs listing 5 reasons why Bitcoin is not an asset class nor a suitable investment. And then the report came out. Goldman Sachs restarts cryptocurrency desk during Bitcoin boom. Now, I will say this. I think these big companies only care about one thing, and that's making money. Whether their sentiment is positive or negative, I think they only care about profit. So there is that to think about. This is PayPal's ex-CEO. Bitcoin is useless as a payment mechanism and ridiculous as a store of value. And then PayPal's entry into crypto, followed by long build-up in expertise. Visa CEO, we won't process transactions in Bitcoin because it's not a payment system. And then they turn around. Visa is working to enable Bitcoin purchases. Blah, blah, blah. Deutsche Bank, ING, Vanguard. Apparently, Vanguard says idiosyncratic risk in cryptocurrency. And then it turns out that they've all been loading up on mining stocks. And US Bank closes the door on cryptocurrency transactions. And then they offer custodian service for digital assets. So pretty interesting how these firms really 180 on what's going on in cryptocurrency. This is some interesting news. Fan token platform Socios, which they do a lot of the European football clubs fan tokens, but they've signed 13 NFL teams with new partnerships. They're not going to be actually NFL team tokens yet because of the league restrictions, but they are working on a partnership with the National Football League in America, which is huge, to really move the whole fan token idea forward. Let's close this out. BlackRock is studying cryptocurrencies, stable coins, and more, says Larry Fink, who's the CEO, same guy who said BlackRock CEO right here. Larry Fink calls Bitcoin an index of money laundering. He had no interest in it, and now he is studying what is going on in the crypto sector broadly, because obviously he sees a way to make money. On Tuesday, crypto payments company Circle, they are the people that manages the USDC stablecoin, which is several $billion. They announced partnering with BlackRock as a strategic advisor after they received a $400 million funding round. So Larry Fink of BlackRock have been working with Circle for the past year, managing some of the company's cash reserves. They want to manage, I don't know why Circle is using BlackRock, but they apparently have an interest now in crypto again. Grayscale CEO, this is the company that has the GBTC, which is the Grayscale Bitcoin trust, which you cannot buy at the moment in Europe, or sorry, in the UK, but it is pretty big here. Let me show you this. Show you what it is. This is a $20 billion fund that actually owns Bitcoin. I don't know if you can see that in the corner of the screen, but come on. There we go. So it's currently priced at $30.19 US. You can see down here the market cap $20.9 billion. So Grayscale has $20.9 billion worth of Bitcoin in its possession. They are the ones that are trying very hard to start a spot ETF. I say BTF because it's Bitcoin ETF. They have a application that is going through right now, and they will receive a decision on that in July, which a lot of people think it was going to be denied. So the Grayscale COO has said if they do not get approved for this spot ETF, let me mute that. Sorry, if they do not get approved for this ETF, they're going to sue the SEC in the US, because they know that this is just an inevitable time this is going to happen. But they want it done. They want to convert their GBTC Bitcoin Trust into a spot ETF. And once this happens, yeah, that's really a game changer for Bitcoin. And it's happening all over the world. In Australia, let me find where this story is, but there is, I think this weekend or this next week in Australia, here we go, there is going to be the first spot ETF Bitcoin will be listed. So this is an exchange traded fund that will actually own Bitcoin, and Australians will be able to buy this Bitcoin ETF. So it's just kind of inevitable in the US, and then probably in the UK at some point. You'll be able to buy an ETF that holds the actual physical Bitcoin versus the ETFs now, and specifically in the US, that really only deals with futures and things that people don't really understand. That you're betting on the future price of Bitcoin, which is insane because obviously it's volatile. What is the price too, by the way? Let's have a look. Hadn't checked the price of Bitcoin today. It's 41,404, so it's up a little bit. We saw in the last day that it was down. So it went down here to 38,000 on the 18th. It's had a bit of a price bump. So yeah, I think this CEO of Grayscale is pissed off. He's annoyed that they keep getting denied. Obviously, the regulators are trying to put the best interest of consumers at heart. They want to protect them, so they want to make sure before they approve a thing like a spot BTF that all their I's are dotted and their T's are crossed, and this won't come back to bite the SEC in the butt, in the ass, if they do approve it. One case, so I was thinking a lot about Bitcoin and this whole narrative around why you would want to buy it. And look, Russia is the bad guy at the moment, yes. However, what we've seen with the situation in Russia is their assets have been seized. You know, the US has got Russian assets that have been seized. There's bank accounts that have been seized, government bank accounts. And I think what's going to happen, actually you can see it, there's a pretty interesting article here, excuse me, in the Financial Times about how much money Russia has in treasury reserves. So this was in February of 2022, 630 billion. And you can actually read about it. I'm going to link this in the description, but if you're interested to know what Russian central bank actually holds, you can go and read a report from 2020, and it shows you this is how much gold they have, 23%, 2021. And then they've got Chinese, Japanese, German, French, US, UK. They hold all of these foreign assets, and they do that, and they hold the foreign currency because they want to be able to trade, buy things. Obviously now they can't do that with certain countries because of the sanctions and the restrictions. Fair enough. But what this situation has shown us is that, you know, maybe countries are now going to start thinking about where they put their assets and what is the liability of holding things like foreign currency, right? So if you're a country, let's not even use Russia as an example. Let's just use another country. Whoever. Let's say country X has, you know, billions of dollars in US dollars sitting in an American bank account. And maybe America says, oh, well, we don't like country X anymore. And, you know, obviously this Ukrainian conflict is a good reason to seize Russian bank accounts. Who knows? I mean, that's all political theater that I don't get involved in. I don't think the war is a good thing at all. I think it's ridiculous. But let's just say that America or Britain or whoever turns around and says, we don't like that country that's holding assets in our country anymore. And guess what? We're just going to take them away. Right? And maybe country X hasn't really done anything terrible. Maybe country X has violated something that, you know, the UK or the US didn't like, and they say, well, we're going to keep those assets. Well, now country X is in a really difficult predicament because all of their foreign treasury money in that country is now seized. So what's the solution? If Russia comes back from this situation, those treasury assets that the US has frozen are not going to ever be released. They are going to hang on to those, probably liquidate them. Maybe they're going to give the money to the Ukrainians. Maybe they'll give it as humanitarian aid, which I totally support. I think that's exactly what should be done. But Russia now has a problem because they can't hold foreign reserve currency in different countries. And nor will they ever do it again because they've seen what can happen. So what option does that leave a foreign country as far as being, you know, protected from their funds being frozen? And not only just the Russian government, but people in general, right? You know, maybe a citizen of a certain country, they get their bank accounts taken. It happens all the time. I mean, we've seen it over and over again. Crazy government comes in and says, we want to take your money away from you. We're just going to seize your bank account. A resident has no defense against that. They can't do anything. All they can do is go down to the bank, withdraw the money, get their cash out if they can. But chances are if a government says we're going to freeze your accounts, start freezing people's bank accounts, there's going to be such a big run on cash. Those banks won't have enough cash for you to pull your money out anyways. So it creates a problem. So what is the solution? Well, there really only is one if you think about it right now, at least today. And that really is Bitcoin. Because it cannot, you know, it's completely decentralized. And if somebody holds Bitcoin in a Bitcoin wallet, there's really not many ways that can be seized unless somebody gets a hold of the wallet or the country says if you hold Bitcoin, you're going to go to prison for 100 years. But, you know, that's really not going to change a lot of people, because murder is, you know, has severe penalties of death and prison sentences, and people still do it. So the Bitcoin being decentralized is really the only option that possibly foreign countries could hold international reserves in. And once Bitcoin becomes more usable as a trading facility, I mean, we've seen also Russia say, hey, you want to buy oil from us, you can do it using Bitcoin, we'll take that from you. It's a big deal. Not to say this is a good thing. I'm not, you know, not saying that's necessarily a good thing. I'm just saying we have to think about what is happening in the world and kind of looking forward to what places we think we could invest that, you know, could be protected. So what I foresee possibly happening is more foreign countries coming in and using Bitcoin as a form of holding their international treasury. And I think that's kind of an interesting thing that we really should pay attention to. Let's see what else. What else do I have for you? We got the Dallas Cowboys in the NFL inking a deal with blockchain.com as the NFL teams begin to embrace cryptocurrency again. Huge deal. NFL starting to partner with these companies and saying, hey, we think crypto is okay. Speaking of international, we got this this place called Lugano, which is a Italian-speaking place in Switzerland that is planning to be the cryptocurrency hub of Europe. So they have a plan to bring Bitcoin to the masses. It's in the south of Switzerland. They are embracing Bitcoin. The mayor is saying that he wants that city to become the hub for companies that are developing blockchain technology on which Bitcoin is based. Switzerland has given regulatory approval to two cryptocurrency banks, SIBA Bank and Signum. The mayor of Lugano wants the city to become the European capital of Bitcoin, and it's recruited some of the biggest names in cryptocurrency to help deliver that vision, including the chief technology officer at Tether, which is one of the biggest stablecoin offerings. And Tether is going to make two funds, $100 million Swiss francs, is $106 million, investment pool for blockchain cryptocurrency startups to attract them to the area, and a $3 million franc fund, a $3 million franc fund for local businesses and merchants, which will help them transition into this cryptocurrency-powered economy. The local government is committed to accepting Bitcoin payments for all revenue streams, public taxes, parking permits, museum passes, and naturalization, and even funeral costs. Within 1 month of unveiling this plan, more than a dozen companies with several hundred million dollars of assets have appointed legal advisors and fiduciaries to begin moving their operations to Lugano. One of the highest profiles is the cryptocurrency Polygon, which goes under the Matic cryptocurrency name, but they are planning to relocate 3 of their subsidiaries and a significant amount of employees to the Swiss city. So just another case of this very, very early adoption that we're seeing with Bitcoin that is happening in the real world. Some good here, cryptocurrency for the good. Ukrainian officials shared photos of new military equipment. Ukraine has received at least $100 million in cryptocurrency donations since Russia invaded. Now, here's another practical use of cryptocurrency. If you wanted to donate pounds to Ukraine, it would be quite difficult. There's all this currency conversion that has to take place. You know, it could take time wiring money. You don't quite know where it's going or whether it's safe. Here, these crypto donations have been received very, very fast in a very quick manner, where they can be distributed, liquidated, and military equipment has been purchased. You can see a picture here of ballistic plates for bulletproof vests to help protect the soldiers. So, case of where cryptocurrency is being used for the good. The big company Alliance, the chief economic advisor, has predicted the Bitcoin is going higher amid inflation. He said in an interview that if inflation continues to rise, which he thinks it could possibly do, that Bitcoin and gold will both absolutely go higher. So this is another big company again talking about cryptocurrency, whereas in the past we have not seen that as much. So a lot of people again worried about inflation. You've seen it happening in the UK and in the US. It's happening, and the chief economic advisor thinks that Bitcoin is going to go higher for the company Alliance. Let's see if there's anything else. Ethereum Foundation holds $1.3 billion in Ethereum and $300 million in non-crypto investments. This is the company behind Ethereum. Again, Ethereum is a company. It's not decentralized like Bitcoin is. Really, Bitcoin is the only decentralized cryptocurrency. At the price right now, $3,099. Pretty big market cap. $373 billion is the market cap. So they own only $1.3 billion of their own Ethereum coin at the moment. So they hold it on their treasury. That is about, I don't know how much that is in actual coins. I don't know how many coins. Oh, here you go. 39,168 Ether coins committed to client teams. Who knows? They've got a lot of their own ETH, but not as much as I thought they would have, considering the main market cap is 300 and something billion. Thanks to Mike Powell for posting this on the Facebook group. We had another company that has lost reserves due to an attack by a very smart person. Obviously not condoning criminal activity, but this guy figured out a way to bypass the system and scored himself $182 million from this company, Beanstalk, which I have never heard of. But on their website, they say, we have suffered an exploit on the April 17th. They're investigating it, trying to figure out what they can do about it. Usually nothing. They can't get that money back. But apparently what this guy did was he took out a flash loan and he borrowed enough money to buy enough voting rights. So he bought the cryptocurrency, Beanstalk cryptocurrency, and he was able to buy enough of the coin to get enough voting rights to transfer the money away. I don't really understand how, this is possible. I don't understand how a company like Beanstalk couldn't have thought this one through. But obviously they didn't. Now somebody has borrowed $80 million in cryptocurrency and deposited it within Beanstalk, and that allowed him to have enough voting rights in the exchange to pass any proposal instantly through the blockchain. And what he did was voted to transfer the entire contents of the treasury to himself, and then returned the voting rights, withdrew the money, and repaid the loan in a matter of seconds. So it was like a hostile takeover. Pretty crazy. I don't know how somebody even thinks about something like that. Let's just take another quick look at the trading 212 account. See where we are at the end of the stream. We've lost £7, 18,493 pounds. Got about 40 minutes left in the market. I don't think we're going to see a big jump in this today. So that's probably where we'll end the day, around 18,400. And there we go. We just lost another £4. So hopefully not too much lower than this. Anyway, I hope you've enjoyed the stream so far. If you have, hit that thumbs up. Oh, BG is Centrica. Okay, there you go. Let me look at the Centrica price. It's at 78p. That's how little I follow. I don't follow British stocks at all. So let me see. How much did I pay for that? Again, I have to sign in again. Let me log in. Also, I don't know, sometimes you get things like stock splits and things that affect the price. Let's see what we got. How much did I pay for those? Can't even find it now. Go back. Come on. So one thing I do not like about this iWeb thing is it's telling me one. I mean, it doesn't even tell you the name of the stock here. It's like 168G. So I'm supposed to know what 168G is. Doesn't make any sense. This one's okay. Lloyd's, obviously. This is Lloyd's, but 4377. Okay, here we go. So 849. So you're saying Centrica is $77.99. So has it gone down? Am I reading this correctly? That we've gone down from 849p down to we gone down to 77.99. I mean, that can't be right. Oh Lord, it is. No, I mean this doesn't even read correctly either. So Centrica was at 401. So Centrica has lost all this. I mean, that's crazy. Wow. So that was another example how buy and holding wouldn't have been good if we just used the Centrica stock. From 2013, you would have lost most of its value. Was at 7, 8, 4 was at 32, about 75, 80% of its value. So just another case of how buying and holding could be really risky on certain individual stocks. I wouldn't have thought that the stock would have been that bad. Just done absolutely nothing. It's up 7.6%. So there you go. You've seen a bit of a bump in the last year because of obviously what's happened with gas prices. But that's nuts. I mean, yeah, buying stocks just in the dark because of their name, just because you know the British gas name, is very, very risky. Greek Easter is coming this weekend. AkiChap, you lost over 20% the last year by the US index fund. 20%? You must have bought in at really bad timing. Yeah, just, the key is you got to buy and hold that fund and just keep buying. If you have extra cash when the market's down, just put more money into it. Stock doesn't exist anymore. That's why. So Centrica has dropped massively due to legacy issues and sold a lot of its assets are not comparable. Yeah. So what, Centrica, what did they buy British gas out? They must have done. Yeah, interesting. Anyway, we're going to let's get out of here. We're almost an hour, so thank you for joining us. We'll be back on Thursday with the Pittsburgh landing stream. Have a great rest of your evening. Enjoy your Wednesday and take care. Be safe. Love every one of you. Thanks for being here. See you on Thursday. Bye.